Good morning, everybody. If you ever wonder about how you can create an almost reliable system for creating profits in the stock market, you want to watch today's show. Today, we are talking about sector rotation. Now, every Sunday, this is our church Sunday with me and my brothers, Corey and Jim, where we talk about making money in the markets, both from trading and also long-term investments. This strategy you can use for both. Now, we talked about sector rotation we talked about sectors in the overall marketplace to get an understanding of it. Now, today we're going to talk about strategies and how to actually make a couple dollars off of it. Good morning, gentlemen. How y'all doing?
Hey, man, I woke up this morning, so I can't complain, man. It's a Sunday, ready to do what we do on Sundays, man. Shout out to everybody, going to tune in on the live as well as the replay because we appreciate all of it. But, it's time to talk. Corey, what's up with you, bro?
Chilling, man. Living La Vida Loca, man. I'm sitting here. I'm a little under the weather, so I'm,
All right, be careful with that cup, Corey. No advertising, brother.
No advertisement.
We only got one advertisement, and that's supplement.
Chicken noodle soup I got a chicken noodle soup with a soda on the side.
Yes, sir. Yes, sir. By the way, before we get started,
go ahead.
I am thoroughly impressed by this. I know y'all don't drink coffee. I drink coffee. I've been running around. I've been up since about 5:30 this morning. I made a pot of coffee, French press for all my coffee aficionados out there. I had to take the dog out a couple of times, actually. I'm holding on to this cup of coffee for almost the last 2 hours. It has not lost temperature at all, and it's still good. So my recommendation, get this. Jim will drop it in the link. We'll also have a link in the descriptions as well. We do get a small percentage from it, but they are the sponsors of today's show. Shout out to Supplement.
Yeah, Supplement is an amazing sponsor. Y'all already know I got the not the white bottle either. I got the the Supplement bottle here. But hold on, let me show y'all this though, right? Let me show y'all this.
I'm getting all the colors.
So there you go right there, Supplement. Let you know what it is. I got the 24-ounce black bottle. You know what I'm saying? I'm a tea guy, by the way. But here's what I want to show you, Kamari. You know what I mean? Because I told you. I told you. I told you.
Nice.
I got the yellow joint, you know what I'm saying? You tell by the tag. So we out here, like, salute the Supplement, for sponsoring the Black Wealth Rebels. It is a black-owned company, and their products are just as quality as anything you'll find in the marketplace. In fact, I think it's better. But I digress. Today, this is Sunday, right? So Sunday, we always do a class, and today we're going to talk about sector rotation. What is sector rotation? How to use it, all the things that Kamari mentioned. But for those in the comments, because we do have a lot of folks watching live, let us know who's here. Hit the like button, share it out, do whatever you can to help support what we got going on with the Black Wealth Rebels, and also support us in person, man. June 14th is coming up. Looking forward to that event. You know what I mean? We'll have more information about that coming this week in terms of our next pod class, as well as Cash Mob, because, we do Cash Mob. So there's that. But we're going to talk about sector rotation. So, and I don't want to, belabor the point. I want to get right into it. But again,
yes, sir.
When everybody comes in, man, let us know who's here. Let us know what's going on with you and all that. Because like I see, we do have folks that are watching with us live. And we are streaming live in the village. And please make sure to join the village. You can join the village by going to blackwealthrebels.com. That is blackwealthrebels.com. Let me get ready to share my screen, though, man. Yeah, I'm going full screen today, Kamari. So you're going to have to, let me know when you can see what you can see and all that. And you're going to have to watch the comments because I'm
doing what I always do.
Hey, listen, man. All right, let me get us set up so we can get it popping. And by the way, good morning, everybody. For those that are watching live, good morning to you. And much success to you, even if you wish me the opposite. You ready?
Yes, sir.
Let's go get it. All right, let me get into. So let me know when, because like I said, I'm going full screen with it. So let me know when you can see my screen.
It's spinning up a little.
It's spinning. Yeah. Still spinning?
There we go. We are live.
Oh, let's get it. All right, so good morning, everybody. And today we're going to talk about sector rotation. This is a comprehensive guide to sector rotation. It's not a long presentation because, we can dig into each aspect of this individually. But we're going to help you understand how money moves between sectors, why it matters, and explore strategies for both long-term investors as well as short-term investors. So what is sector rotation? So sector rotation, to kind of simplify, is when capital flows between market sectors based on economic cycles. If you guys have been with us on this Sunday journey as we continuously add on to these classes that we use for our long-term investing as well as short-term trading, we have a lot of different things that we've talked about. And the one thing that we want to consistently mention is when you invest in the stock market, you are buying equity in a company. And I told you guys, I'm going to repeat that every Sunday, as long as we're on here Sundays, as long as I breathe, because I think it's that important. And I think it also helps you understand as you make moves, whether that's short-term trading or long-term investing. But there are different sectors within the market. And if you go back a couple weeks ago, we did an entire class on the various sectors. What are they? How they move, what gives them value, so on and so forth. But there's a whole class on that. And all our older classes are available in the village if you go to blackwealthrebels.com, all of our Sunday schools. So one of the things that involves in the sector rotation is market trends, right? So different sectors perform better at different economic stages, right? So there's stages in our economy, and different sectors perform better depending upon which stage we're in. Also, what can affect it is investor sentiment, right? So collective market psychology drives rotation patterns. There's a lot that can, well, actually, it's not a whole lot, but there is a number of things that can, make things change in terms of where they are, where the capital flows in which market sector, right? So a couple other things I want to put on here. It's not in the PowerPoint. I just want to make sure I put it on the record so you guys understand that what makes a sector rotate. Economic conditions. Sometimes you may have a new innovation or invention that hits the market and you can see a lot of capital flow, or sometimes it's just a narrative. I remember the narrative recently around AI, and you started seeing so much capital flow into AI companies. I mean, almost to the point where it got ridiculous, where you start seeing people just add AI to their company name and they still would get capital. I know we saw this a couple years ago in like 2017, 2018, during like a crypto craze, where crypto was the narrative that was dominating the markets, and companies that had nothing to do with crypto would just put crypto on their name, and so much capital would just flow into that sector. And then when that became sexy, the capital will flow out of the sector and flow into other sectors. As a trader and investor, you want to see when the capital is moving into a sector and then when the capital is moving out of a sector, so you can make your moves accordingly. Sometimes you may have a global political development that can have capital flow into one market. You may see a lot of capital flow into like defense companies and things of that nature, depending upon what's going on geopolitically. And also moves in other financial markets, right? Where you may see a market that's not directly our market here in our country. And because of what's going on there, you can see capital inflows or outflows, depending upon what's going on. So all that falls kind of under market trends, but that's the idea of what sector rotation is, just to kind of like, give you the groundwork of what we're going to talk about. Is when you're watching the various sectors and based upon what's going on in the world, you'll see capital inflows or capital outflows. And your job as an investor or trader is to figure out how to use that, to put food in your family, for lack of a better term. Now, here's why it matters for long-term investors, because economic cycle awareness is important. Consumer staples outperform in recessions, and tech shines during recoveries. So tech dominates our market. In fact, I mean, if you look at the S&P 500, specifically when it's weighted, you'll see at the very top, all you see is tech. But the thing is, it's not the only sector. But capital tends to flow in there during recoveries and when we're booming. But then what happens is if we get into a recession or some sort of pullback, you'll see consumer staples. And we talked about what a consumer staple is in the episode. We went over the various sectors. But those are things that you need to buy regardless of what's going on in the economy. But it also helps you for better asset allocation, because if you're into diversification and balancing your portfolio, having an understanding of sector rotation will help you rebalance your portfolio and manage risk and also capture growth when it's time to capture growth. And also, it helps you avoid complacency. So you don't want to stay too long in sectors that may underperform for years. Now, this is important for long-term investors, but also important for people that are taking swing trades, or, is watching what's going on in terms of sector rotation. And by the way, Corey Kamar, if you guys got anything to add as I'm speaking, please, because again, I can't, I'm full screen right now. So go ahead and say what you got to say.
No, keep rocking. I mean, the only thing I would add when you talked about what fuels money flows, I would also say fear and greed. Human emotion plays a major factor in how money moves in and out. And fear and greed could be wrong.
Yeah,
a lot of times it is wrong.
Yeah, that goes to and and thank you for saying that, because maybe I should have said it that way, but that's what I meant in terms of like narratives too, right? So a lot of narratives around fear and fear of missing out too. FOMO.
Yep. Yep.
FOMO is a big thing, which is why when you see these narratives and you see the AI or the crypto, whatever the next thing may be, I remember even before then, we saw all the inflows into the cannabis stocks, right? Because
I
that
mean,
was
listen, we can go back to the .com bubble when everybody kind of hazed Warren Buffett about not, getting on a train. But here he is.
Yeah. And the fact is, though, right, just to be very objective in speaking of that, though, there are people that made a lot of money doing that, because if you
Absolutely.
understand set the rotation, you know when to get in and when to get out. Some people don't want to play that game. They're like, look, I'm not trying to play that game. But it's not to say that you can't play the game and get in and understand that it's a narrative and then move accordingly, because there are those that do that. Anywho, why it matters for short-term traders, right? Trading with strong sectors offers better volatility and trends. And one of the things we know as traders is volatility is key in order to, make some chicken. So one of the reasons why, and if you guys are in the village, you see that on my day trades per se, not my long-term trades. I put my swing trades in there too, but a lot of you may not know, because when I put a swing trade in, it's more of a leap than a swing, I should say. And when I put them in the village, I'm buying out the 2026, 2027, so I don't really update them that often. But on a day-to-day basis, I'm trading SPY, and that's because of the volatility and the ability to make money with that, the momentum that happens with that specific holding. Also, relative strength. When you compare sector ETFs, and you can find where the action is happening. I remember not too long ago, what was it? XLF, right? A lot of capital was coming directly into the finance sector, and I can see it by just watching XLF. And I saw a huge spike, and then boom, capital flow right back out of it into tech, right? So it's interesting now when you watch tech, because it's almost like capital into tech, capital out of tech, capital into tech, out of tech. It's like tech and everything else. But that goes to what's dominating our economy at this point, right? I just read an article a couple of days ago. In fact, I got to refine this article, because I want to do a whole episode within the village about this. It was what companies, right? The top 10 companies that generate 100 million the fastest in 2025, right? So I'm gonna see if you guys can take a guess at what number one, Corey and Kamari. But this article was about how long it takes a company to generate $100 million in revenue, and what companies can do it the fastest. And they gave the top 10 companies. What do you think was number one, Corey and Kamari?
This year?
It's right now. Right? It's right now.
AI.
Well, no. What is a specific company, not an industry?
No,
a company.
The AI.
Oh, you mean like nah? You talking about the company that has a ticker symbol AI?
Yes.
Are you talking about OpenAI?
Yeah.
No.
OpenAI.
Oh, that's not their ticker. OpenAI is not publicly traded. Because the company that has the ticker symbol AI is that's the government company. What's their name? So I know you weren't talking about them. So who do you think, Kamari?
What
C3 AI has the ticker symbol AI. That's why when you say AI, I'm like, not C3 AI.
No, but what criteria are we talking? Is this new start, old company?
No, overall in the entire world, the companies that make 100 million the fastest, right? So this is revenue. How fast they can make 100 million. What do you think?
That's rough. What company?
Just throw a name out.
And this is ever?
Right now. Well, it's going to be ever anyway, because companies making more revenue now than ever. But go ahead. Right now.
Right now. I'll say Facebook. Or
They're
Meta.
in the top 10. They're in the top 10. Corey, you got another guess, bro?
No.
All right. This is the reason I'm bringing this up, by the way. I want to do a whole episode on it. I'm gonna find the study, and we're gonna do a whole show on in the village about it. It's actually Walmart. They said that Walmart makes $100 million in revenue every hour and 16 minutes or something crazy like that. That's how much revenue they make. I think the top three were Walmart, Amazon, and Apple, but all of them make over $100 million every hour and some change, which is absolutely insane when you talk about value, right? These companies make over $100 million every hour. So, but the reason I was bringing that up when you talk about sector rotation is because in that top 10, I think there was like 7 tech companies and only 3 other companies that like weren't necessarily tech. And that was like Walmart and Nike was in there too in the top 10. But everybody else was pretty much tech companies. And I'm like, okay, so we talk about how they dominate the economy and how we see from a sector rotation things flowing in and out of tech. But that's wise because that's where the money is being made in 2025. But here's the thing. It hasn't always been that way. I know for some people that are just getting into trading who've only been around for a short period of time or even investing, you always have seen tech dominate. But us old fogies remember a time where tech wasn't what tech is now. And if you study history, you see it go from everything from railroads, to energy companies, oil companies. So you'll see how things play out over time. But right now, tech is dominating. So when you talk about sector rotation and watching what's happening, you just really got to pay attention to where there's inflows and outflows. And there's a lot of different ways to do that. One of the ways that I do it is by following the actual ETFs and just looking at when you see money coming into those different spaces, whether that's pharmaceuticals, a lot of different ways to see what's going on. But anyway.
And so I'm guessing you follow the State Street ETFs for the most part. For
the most part, yes.
Yeah.
Because those are in my opinion, right? Not even opinion if you watch it. Those are the ones that are liquid and they're better for trading, right? Because I long term, right? I used to buy a lot of the Vanguard ETFs, but
they don't have the volume, the same level.
Yeah, the volume just isn't there. But anyway, sector rotation in action, right? In the recession phase, money exits techs and it enters healthcare and utilities. Good old utilities, and we talked about utilities a lot on Sundays, right? Although I would assume that a lot of our audience really doesn't invest in utilities. But it's the reason when you play Monopoly, you see the real estate and what else do you have around there? Railroads and utilities. It's a sign of the times in terms of when Monopoly was made. But also they tend to be more mature industries, pay high dividends. And in recession phase, people want to go into more mature sectors, things that they can consider to be reliable and not necessarily more speculative as we go into a growth phase. But if you go to early recovery, capital flows into financials and industrials, right? That's early recovery. Expansion, as we talked about, tech, consumer discretionary, which is different than consumer staples, right? Discretionary are things that, in terms of you don't necessarily need it, but you want it. You know what I mean? So, but the peak phase is smart money begins preparing for the next downturn. So there's always market cycles happening. And depending upon where you are in the market cycle, you be prepared, right? If you feel like we're getting ready to go through a downturn, then maybe you want to exit from a lot of the growth companies, and this is how you protect your capital and grow something over the long term. Now, I know a lot of people like, look, I don't want to do all that. I just want to buy an ETF and dollar cost average. And that's great. But I think it's still important to understand what's happening because also by understanding sector rotation, a lot of times it helps you from a mental standpoint, not get freaked out when you see changes in the market. Like, you see a lot of things pulling from tech and you just freak out and you want to sell everything. I was thinking about this the other day as we got, recovered from that dip we saw over the last several months. And I was thinking about how many people reached out to me and told me that they were exiting their 401k or should they sell their 401k or I'm getting out of everything. And I'm sitting there like, man, it didn't even, at this point, it didn't even take it didn't even take a year. It took a couple months and now we back in profit mode. It's like you missed on all that. You sold when everything dropped, and now you're going to buy back in when everything's up. This is exactly how you don't get rich.
Same thing happens all the time.
But that's what I'm saying. What I'm saying is I've seen the playbook so many times at this point that it's just like I just sit back and say, man, it's about to happen again.
And I hate to say this, but in the professional space, they call retail money dumb money. But they do the same things all the time. Yeah. And it's like if you just study the history, as Jimmy always says, do the knowledge, you'll see that it's usually an opportunity to buy when you have major dips like this.
Yeah, which is why Kamari, I can't see the screen right now because I'm in full screen mode, but Kamari's favorite little yellow tag, DCA is the cheat code, right? And I know like a lot of times when you're online and you're watching a lot of content, people will tell you they can time the market, and that's fine. If they can't even, God bless them, they're great. But I would say, listen, from a data standpoint, right, we have a bell curve here. Most of us are going to fall in the middle of that bell. And what that means is take that off the table. just DCA. Don't even worry about it. Don't even worry about it because the data says that most of us won't be able to time it.
Here's the funny thing about that, Jim. There are some people who can beat the market and time the market.
That's why I said it's a bell curve. You're going to have people on
no. Right, yeah. But I was going to say normally they can't do it for that long. And so it all goes back to the mean. All goes back to
the mean. Everything
like you said, the bell curve. Yep.
When you first start taking stack, that's what they tell you. Everything regresses to the mean. So what I'm saying is DCA is also, to me, is a smart thing, right? Because DCA is there's emotional intelligence involved. And the thing about the market that I realize is sometimes EQ can be greater than IQ, right? You brought up Buffett. We talk about Buffett often on here. One of the things he talks about is not being the smartest person, but having the better temperament in terms of being able to withstand, drawdowns and things of that nature, and also just being patient. And patience, man, patience is a virtue. Let me just say that, right? If you can have patience and you can have a long-term mentality, have a builder's mentality, then you can do some damage. And DCA is the cheat code to that because it takes into account all those things. Just let it run and don't even worry about it. Go touch grass, enjoy life, enjoy everything that life has to offer you, man. And DCA and keep it moving. But getting back to the overall topic of sector rotation, I still think it's important to understand that outside of just trying to manipulate your portfolio, because it will help with that mental part of not feeling like I have to exit when something goes bad, right? Or not having the FOMO. Just understand that things are going to rotate in and out of various sectors, but at the end of the day, the day's going to end. And long term, we're looking for growth. That's what we're looking for. We're looking for growth because people always say, well, what happens if the whole thing crashes and the market goes bad? I'm like, if that happens, I'm going to have other issues that I'm going to have to deal with outside of my portfolio, right? Because our entire economy, everything that we live and know is based upon what happens in the market, which is, to me, another reason why the market is so important and so impactful, and why you see the people that control this place, all of them have their resources there. Because if it does go, we're going to have other issues. That means that we got zombies walking around, or we having a revolution unlike anything we've ever seen. So it's time to grab the UWAP anyway. So I'm not going to be thinking about my portfolio.
You're going to need the UWAP. You're going to need some food. You're going to need some gas.
And guess what? I'm working on those things too. But here's the thing about the sector rotation. And here's what I say. As a trader and or investor, you want to see, and Kamari just talked about dumb money, when which would make you think that the other side is smart money. And I think that's
a lie too.
Yeah, that's also a lie, right?
The data shows that too.
But I have
more of it.
I have a theory though. It's actually not my theory. It's a theory that I took from Chris Tucker. I was watching Rush Hour, and he calls it Carter's theory of criminal investigation. But I think it also applies to investing and trading, right? Because we talk about following where the market movers are. So I'm gonna play you this quick clip, but it's only a couple seconds. But I was watching Rush Hour. I said, this Carter's theory, I'm gonna apply Carter's theory to the investment space because it actually is relevant. So here you go.
Lee, let me introduce you to Carter's theory of criminal investigation. Follow the rich white man.
Follow the rich white man?
Exactly. Now you're learning. Every big crime has a rich white man behind it waiting for his cut.
That also applies to the market, right? So there's always
that applies to everything from crime.
So that's all I got on sector rotation. But I think Carter's theory applies in this instance, right? It applies to sector rotation.
Hold on, Joe. I got to do something. I didn't see the clip in advance, but I got to give you the horn for that because that's an absolute fact.
It applies to crime, and some will say in the financial space it's probably more crime than anything else. But I think it applies in trading and investing, right? Where are they moving their money? If you go to Twitter, right, there's a lot of Twitter accounts that do this, but there's certain Twitter accounts that only trade based upon what either Nancy Pelosi is doing or they pick a specific congressperson. And there's also portfolios, speaking of Warren Buffett, who's in front of us now, who just mirror him and do what he does, right? And if you look at this and extrapolate over a long period of time, most of those are beating the market, right? Because they're just following money. I'm just following money is what I'm doing. So I say all that to say, when the way to think about sector rotation is following the money, right? And use Carter's theory. So I'm pretty sure I'm the first person to ever bring that to the table. So there you go. There you go. That's something new for the finance space, right? Carter's theory, right? Use Carter's theory. I'm gonna get that published somewhere. We're gonna call it Carter's theory, and I'm gonna make sure I cite Chris Tucker. But anyway, man, that's what I have on a sector rotation. I hope you guys have gotten anything from this. But, for those that are in the village, the PowerPoint part will be cut out and put to the side, for you guys. But the full class, this full show today will be on there as well. But that's what I got.
Okay. All right. Well, we got some people in here. Let's acknowledge our folks real quick. If anybody has any questions, get them together now so we can talk about it. Miss Maui Lorraine's here. Welcome, welcome, welcome. Jim Fari.
Yeah.
I said that right? Welcome.
Yeah. Welcome. Google is in the top 10, by the way. We're Alphabet.
Yep.
Apple number 3 there. Yeah. Larry, what's good, Larry? How you been?
What up, Larry? Says appreciate the great content as always, Kings. Appreciate you too as well for pulling up.
Thank you. Appreciate you.
Maddox, what up?
Good morning. Yeah,
right,
so I mean that's sector rotation, man. But I also want you guys to understand, apply Carter's theory to life, like Kamari said.
Nah, you said it. I didn't say that. I can't listen. I gotta give you.
No.
I gotta give you your flowers on this.
No. But what you added to it was right though. I said apply it to finance. You was like, man, it applies to more than that. It's true. It applies to so many parts of life, man. And it's waiting for their cut, right? Because that's how the world works, man. We live under capitalism, so that's how everything works, man.
Absolutely.
Listen, man, I appreciate you guys. I also want to bring up this though. Today's episode is brought to you by Supplement. You know what I'm saying? Make sure you go your supplement bottle. You know what I'm saying? Get multiple colors, because that's what we do. I'm getting rid of all the bottles in the crib. We're going full supplement in this household. And Supplement, by the way, makes the best. Stay hydrated, y'all, but it makes the best bottle that there is. Black-owned company. We support them, and they are sponsoring the Black Wealth Rebels. So I want to make sure that, and if you're watching this live, though, it's in the comments. You can get the link to make sure you support Supplement. And so that's what I got on sector rotation. Please understand that as a trader and or investor, know how to take advantage of it, know how to use it to help you with your temperament in terms of even being in the market, because that's important as well. Corey, you got any thoughts, bro?
No, man. I already think people was kind of silly. I ain't gonna say stupid. I'm gonna just say silly. So,
all right, Corey. I got a question. I know you want to answer, man. You got Knicks or Pacers, bro?
I gotta take the Pacers because I don't like nothing about New York.
I respect that. I just find it funny when they win and what happens on social media. So I want to see them destroy the whole city and go crazy. But I respect that answer. What you said too. Come on, I see you over there. Grab the book, man. You went to the books, man. What you about to show us, bro?
So I've been doing sector rotation for a long time. I actually used to use it when I was a professional investor. One of the books that put me on to that. Let me get that.
Trend Follower.
Yeah, by this dude, Michael Koval.
I actually never read that one.
Yeah, he does a lot of stuff with futures. I haven't read this book in probably at least a decade, but I'm sitting here messing around with Chatty and thinking about, adding more sector rotation into my trading strategy, because I used to be pretty successful with it. And I need to bring that back to things. Like I said, I haven't been as active in trading. I'm definitely jealous of you guys, especially Jim. Jim being there like multiple times a week, smacking up SPY. That's like his favorite pastime. And I'm like, I need to get in on that action. But
listen,
just building things out.
The one thing I can promise all you guys is, and this is why it's important to tune in on Sundays to the Black Wealth Rebels, is there's a lot of information out there, but nobody has brought up Carter's theory though. So I see, you know what I'm saying. So we just want to make sure that y'all know that that's when you get those kind of analogies and things of that nature at Carter's theory. But anyway, it's definitely shout out to what's that
New
Ramen for the super chat. Definitely appreciate it.
Appreciate that. Thank you.
And we try to bring value, man, and there's a lot more value too, and a lot more content in the village by going to blackwealthrebels.com. You can get it. I got rip trading. That stove hot. Hey, listen, Wayne, there's nothing wrong with that, man. So here's what I think about that, Wayne. First off, trading isn't for everybody. You may decide that I don't want to trade because trading is commitment, and you can't. It's not like you trade one time, you get your bread, and you got to be into it, right? You got to be into
if you don't commit to it, you're gonna get
Yeah. So
And I also want to give Jimmy credit, right? Because I talk crazy about traders or so-called traders, right?
Mhm.
Because they always show you their wins. They never show you their losses.
Yeah.
Jimmy will show his losses.
No,
So
yeah,
I will.
I get
No, no,
smoked
no.
off.
But I mean, I'm giving you your flowers, bro. I mean, this is a rare moment in history right now.
Damn.
Right? So, like, I mean, that's real rap. All traders lose money. The question is, how much money are they losing and how many wins are they having? The
Listen,
goal is to have more wins than losses.
and Wayne, I
So,
appreciate your transparency too, right? I appreciate the
yep.
transparency because everybody won't admit to that, right?
What
And
up,
the thing
Bar?
is, I know a lot of folks who be like, man, I can't trade, blah, blah, blah. And I'm like, well, what happened? I did this trade and I lost. I'm like, so what happened next time? Oh, that's it. So, and I'm not saying that's what Wayne did. I'm just saying that Wayne was honest enough to say, I got ripped. That stove is hot. And that stove is hot and it can be hot on both sides, right? So, listen, you got L's and losses, man. But, you know, one thing I learned from my brother, Passer, and shout to Passer, who, you know, he's always on Fridays with us. He told me something a couple years ago because, you know, we always hear the thing like, you never lose money when you take profits. And Pass was like, that is an absolute lie. He said, you got to take bigger profits, right? And take more wins than losses. You can take losses. Losses are fine, but you got to take more wins. And when you make wins, you got to have those wins be a lot bigger than when you take losses, which is why stop losses are important. Or, you know, just knowing when to cut and run, even if you don't set stop losses, knowing when it's like, yo, today's not going. Because even the trade I just made on Friday, I was getting ready to run out of it. I was like, yo, and I put it in the village. I was like, if this falls below a certain level, I'm getting out of here. I'm gonna take a loss, but I'm getting out of here. And it just, you know, bounce back went my way. You know what I'm saying? We got a couple dollars, but wins and losses are part of it. And also you got to pay tuition. There's no trader I know that hasn't paid tuition. You know what I'm saying?
Gotta pay them dues.
I've had days where I lost crazy, like big 5 figures, like, you know what I'm saying? Like, you know, you lose 20 bands in a day. I've had it happen. You know what I mean? But I've also had the opposite, which we're not going to talk about. But here's the thing, though. You got to really commit to it. And most people aren't willing to commit to it and probably shouldn't. And I always say that. I always say you shouldn't trade if that's not your thing. You know what I mean? Oh, also, I want to give my brother Kamari his flowers, too, man. I don't know if you guys saw that Kamari had an article written up about him in a publication and whatnot. You know what I'm saying? Which was dope. So I want to salute the Kamari for that, man. You know, I read the interview and all that.
Salute.
Thank you, sir. Thank you.
And also, like I said, shout out to the publication for using my photo to get the clicks up. You know what I'm saying?
I knew that was coming.
I noticed what they was doing. It was like, this is about Kamari, but let's show a picture with Kamari with like Jimmy in the background because I know what y'all was doing, y'all. It's all good though. You know, it's all right.
Well, listen, man, they asked me for a bunch of photos. Those are the ones I have that are pretty good.
Man, listen, it was us in the community though. It was us in the community, which
Correct.
is dope.
Correct.
June 14th, y'all. June 14th. Even if you want to come in town, come in town. What's up, Bar? I see Bar in the comments. But listen, even if y'all want to come in town, our event is June 14th. Bar, we better see you there June 14th, bro, because you already in the area. June 14th, Coffee, Creams, and Dreams. 15th in Fairmount. You know what I mean? Pod class, as well as the Cash Mob. We got that going on. Yeah, man. This week, we got a busy week this week, too. We at the youth study, right? We there on Wednesday, and then Friday we actually are doing something for a school. So shout out to that school. Boom, there we go. June 14th, Coffee, Creams, and Dreams. Pull up.
And our topic for discussion that day is the power of Black investment clubs. There's
Yes.
a lot of wealth potential in collective economics, or just working together to keep it simple.
Yes.
Wealth is a team sport, y'all.
Shout out to everybody going out to Malcolm X Park today to celebrate the 100th. The 100th. How about that one?
Time flies, bro. Time flies.
Yeah. So we have a question. We actually talked about this a little bit on Friday, but we can go into it right now since the question is here. What do you think about the drop in the U.S. credit rating? Kamari, what is your thoughts?
So Moody's downgraded the U.S. because they feel Washington doesn't have a good hand on the pulse with all all the tariff talk, which is coming out of the White House, and Congress and Senate are basically placating and doing whatever the government whatever Washington wants. Back that up. Whatever the White House wants. I think it's sad. It's going to cause more volatility in the market. You definitely want to keep track of your bonds and seeing what's going on with your bond portfolio if you have bonds, because it can impact that the fastest. Also, some of the other big companies like your Walmarts, your Apples, any of the big corporate bonds, you want to look out for those too,
Yeah.
because those might get hit as well. But for the most part, it's like Jim said, nobody can really time the market. To me, as steady as it goes. If we're talking about retirement money, then you might want to reallocate that money for what's more favorable for your retirement. If we're talking about your mad money or your trading money, keep plugging away. And DCA.
I say keep your eyes open and your wallet in your front pocket, because it's really about just watching what happens. And I think that is interesting. I think it's probably warranted, right? Because when you talk about debt and managing, so I often look at the government the same way I look at a person. When a person sits down with me and says they need help, right? And I am not anyone's financial advisor. Anything we say on here is for educational, informational purposes only. But I have worked in this space before, and I do have family and friends that come to me and say, I need help, right? And the first thing I do is I say, let's see what you got coming in and what you got going out. Let's start there. Let's write things down. That's always where I start. What do you have coming in and what you got going out? And what's shocking to me is how many people don't know the answer to those questions, or when they actually take the time to start to write it out, when they realize that, hold on, I got more bills than I got income, right? And sometimes it's a wake up call.
Now, Jim, I don't trust when people write it out.
Okay.
Because I feel they have short memories. I have them actually go through their bank statements, and I know that's not perfect.
That's not perfect either. But here's what I tell people. I was like, if you're not honest, right, you're not lying to me, you're lying to yourself. So
garbage in, garbage out.
Right. So, but here's my point in saying that is, I look at our government and our how we manage our money, and we probably should be downgraded. We're no different than the average American in terms of when we talk about income, what goes in and what goes out, right?
The tax policy alone, like the 2017 DCJA, was not a good tax policy for the overall country. Excuse me, y'all. I'm tired. I need more coffee. But it's not good because it's creating more deficits for the overall country. Just like regular people, when you have more debt, your credit rating typically goes down. It's the same idea.
That's my point, and that's where I was going with the whole long drawn out analogy, is that it probably should have been downgraded, right? Because we haven't had a handle.
We did have one before, right?
Yeah, we did, but I'm just saying, like, this was, that's why I said it's warranted, right? If I'm looking at our country and I'm giving us a credit score, right, we probably our credit score probably wouldn't be that great, right?
It's probably in the 550.
Our utilization is probably out of control. So I'm saying that to say that it's probably warranted. But
the DTI is out of whack.
Yeah, how do you protect yourself? Like, keep your eyes open in your wallet in your front pocket. Just really pay attention to what's going on. Like Kamari said, really follow the bonds. See what's going to happen with the bonds. But
I would also say, I would look to diversify again for your long-term money, a little bit more international, especially Asia and Europe.
My points, because what I was going to say.
I'm sorry.
What I was going to say, that's a great question for the overall conversation today in terms of sector rotation. And what I see a lot of folks talking about now is even allocating money out of the country, because the great thing about the market is there are going to be sectors that boom regardless, right?
There's a bull market everywhere.
There's always money being made somewhere. Even if money seems to be flowing out of one space, it's going somewhere. Money needs a place to go, whether that's in bonds, whether that's internationally, or whether that's in, staples, whatever it may be. Somebody's making money. So when you think people going crazy and they're losing money, somebody's making money.
Always.
There's always somebody on the other side of that, man. You can apply Carter's theory to that too.
That's a fact. All right, Champ. What up, Champ? Champ's got a question. When you write down to manage your money, do you write everything down or just the normal monthly bills? I personally, I tell them write everything down. Because that gives a true reflection of what's going on. And then, there might be outliers, or you might have went to go see Cabo Carter one month and you didn't do it the next. But all of that will bear it out on the fruit.
Listen, I agree with Kamari. Write everything down. And sometimes what you don't realize is, like, I'm from Philly, right? So we got Wawa's up here. Shout out to y'all that don't know what Wawa is. I feel bad for you. But I've had people that go to Wawa every day and they don't write it down because they don't consider it one of their monthly bills. But I'm like, dude, at some point, you need a Wawa budget, right?
Wawa, Starbucks, Dunkin'.
Yes. I believe in allocating money for all those things, right? I believe that you need an entertainment, like a little entertainment budget, right? Listen, some of y'all might need a Nate budget. If you want to get into Nate activities, you might want to create a little Nate budget where you're budgeting money for Nate activities, right? Whatever your thing is.
What do the ladies have then? Do they have a Nate budget too?
I mean, whatever they want, whatever you do. I don't know what it is you do. You know what I'm saying? Like, listen, whatever you spend money on, you should have a budget for that, right? There should be, when you have money coming in, you do your little numbers, it should go down to zero. Even if you have savings or money you're putting to the side for fun, you might like going to football games, budget for it. I say write everything down because that's the way you get a true idea of what's going on. So
it's funny, quick story. I have a client of mine who also has a business on the side, but they work a full-time job. And they're like, I'm trying to figure out how to quit my job. I said, all right, well, let's look at your money. And so we looked at the money. And what we discovered was she eats her money. A lot of people actually eat their money. I probably eat my money too.
Man.
But she would often go to McDonald's, try to get me to write her McDonald's off on her taxes. And I'm like, no, ma'am. She was like, I was having a business meeting. I'm like, you having a business meeting by yourself? I was like, that's not how that works. But I said, listen, if you slow down on some of your eating out, you can start saving a reserve to quit your job. So
I was having this conversation yesterday. I was at a family event last night, and I was talking to some of them about that, right? Because I've had people in my family like ask for help. And a lot of times their issue is because they're paying back. So they make money, but they're still paying back old money, right? You got credit card debt from years ago. And I'm like, well, what did you use the money for, right? And we got into a conversation of the difference between leverage and just like using consumer credit.
Right.
And it's like, bro, I took out my friends. We all went to get cheesesteaks a couple of years ago and called XYZ. I'm like, yo, so you're still paying on cheesesteaks from 2023 and 2025. How are you ever going to get ahead, right? And to your point, I do realize that because there are a lot of younger people in my family who don't cook. They eat out every meal. They're door dashing, Uber Eatsing, like every meal.
Listen, man, even some of the OGs now.
Yeah, but like, yo, I'm sitting there like, and it's weird too, because I remember as a young boy, right? I couldn't wait to get my license, get a car. These young folks don't even care about that. They Ubering, they door dashing, they Uber Eatsing. All the gig economy is taking so much capital from a lot of our younger folks, and I realized
that it's robbing people. It's like, was it you, Jim? We was talking about people spending all this money on Ubers but won't buy a car.
Yeah, that's what I'm saying. They're still doing it. Yeah, they're still doing it. Like it's a thing. It's
like
a thing.
Sometimes 10 times more than what the cost of the purchase of the car, the insurance, the maintenance, and all that's going to Uber and Lyft's pockets.
Now it's funny because I was talking to someone yesterday also at the same event who lives in Center City, right? And they don't have a car. But for them, they don't need a car because they're in Center City, right? They live in Center City. So they're a walk away from pretty much everything.
Right.
And I was like, your situation is different. And some of y'all living all the way out the Northeast and y'all still Ubering everywhere and you Uber Eatsing and I'm like, it's
well, their cost is high rent though, because they live in a high rent district.
True. But I mean, on the flip side, it's almost like living downtown New York. Like, what do you need a car for? You don't need a car. I
mean, honestly, everywhere in New York, a lot of my family lives in New York. A lot of them didn't get cars until they was in their 30s.
Hey, listen, man,
I don't get it, but I get it.
I get them iron horses, man.
Yep.
Yeah, man.
Any other questions about sector rotation or money overall before we end tonight's broadcast? All right, Jarrell's in the building. Oh, Don Johnson's in the building. What up, Don?
Definitely watch the replay, man, because you got to see the Carter's theory, man. We brought that to the universe, man.
Jim putting new things in the universe. Well, not new, but
man. I got to cut that and make that a clip, man, because that's something new brought to the table, man. Anyway, with that being said, though, I know what Don put them eyes up because I was talking about a Nate budget. I think Don must got one. That's when I popped up. So I said, no, Don, I'm joking, but I'm serious. If that's your thing,
joking, he's serious. No, Don is the king of the Nates.
Budget for it, though. Be fiscally responsible. Budget for it. Boom. There you go. Anthony co-signing it.
All right. Anthony says facts. Writing everything is key. It let me know that I was spending a lot of money on fast food. Again, eating his money 3 to 5 times a week. I changed it to 3 to 6 times a month, and it helped me a lot.
Boom. It's that one
That's a
change.
big difference. Yeah.
One change, bro. One change.
And listen, I'm not like, and I know Jim's not like this either, but I'm not like some of these other, let's see, entertainment gurus that are like, I'm a Nazi, I'm a latte Nazi, I'm a eat out Nazi. Listen, live your life, but don't let this stuff rule you though. So keep all that in mind.
Yeah, this is true. Now, what else we have here? We got the next step is okay. Next step is occurring in Los Angeles. Waymo driverless vehicles.
Yeah.
It's funny. It's funny because shout out to our brother Malik. Me and him had a debate like years ago. He told me he was going to be here in 16 months. And I'm like, nah, it's still not here yet because I feel like
you don't know nothing about our government. If you think anything is going to be,
that was my argument. My argument was the government's going to block it. And every time something like this happens, he sends me an article. See, is it here? It's about to happen. It's about to happen.
But I think the thing that, and people don't realize this, the thing that's kind of will show you the trend, elevators. Everybody uses elevators now, but it took a long time for elevators to actually become part of mainstream.
Have you read the history of that before?
Yeah.
I ain't gonna lie, I didn't read the history. I listened to a podcast about it, but it's
well,
still
no, I probably did listen to a podcast. One of those.
Yeah, it was a podcast, but they were talking about the history of elevators and how when they first came out, like people were so deathly afraid of them that they would not get on them. They just really wouldn't get on them, and they had to like do all these kind of like circus tricks and things to get people to realize that they're safe. And it took years before people would want to use the elevator. Cats like, no, I'm taking the stairs. But yeah, so that's a thing. And the thing about that is that's a great analogy because if a driverless car pulls up to me today, I call an Uber and a driverless car pulls up, I'm gonna cancel my ride. And I'm a dude that embraces
that. I ain't
technology.
mad at that. I'm not mad at that.
I'm just saying, you know what I mean? Like I need more testing to be done, dog. Like I ain't personally ready yet, and I consider myself somewhat of a futurist. You know what I mean? But I'm cool. All right, so Wayne says, talking about international investing, my guy is a financial advisor and recommends that I invest in Argentina. I was concerned because they are going through hyperinflation, ticker symbol ARGT. I mean, listen, being concerned is always a good thing, right? You're being safe and careful. So I haven't done enough research about Argentina to really give you an educated opinion on that. I'm gonna look into it based upon what you're saying. From an international standpoint, though, there's different approaches to international investing, right? Because some people believe you don't actually need to invest internationally if you're buying a huge conglomerate that's based here in our states. Because most of the big companies if you look at our biggest companies, most of them are international companies anyway, even though they're based here, right? We live in a global economy. So if I tell you, let's pick anybody, let's just say Google. Google is an international company. Right, they're an American company, but they're an international company. So some people take that approach. Like if I have resources allocated to the big boys, I'm already internationally invested. Some people want things that are based in other places, right? Like there's a lot of people that want to invest in something like a Samsung, and it's difficult to do from the States unless you get exposure to it in the ETF or something like that, or a Hyundai, or a lot of these companies that they're from somewhere else, but they're big here because they're international companies. Argentina specifically, though, I would have to do some research and see, what's going on in Argentina and what companies over there are generating, any sort of capital. I don't know.
I mean, it's okay. I mean, the expense ratio is about 0.59%. I wouldn't put all my eggs in one basket, but as Jimmy said, a lot of the SPYs, the VOOs, the VTIs, the VTs, they have international exposure. So you could also look at that as well. But
what companies are in that ARGT? What holdings are in there? Like what companies are generating that kind of chicken over there? I don't know.
Hold on. I added up. Hold on. I will put it on the screen and we can look at the holdings real quick.
Okay.
Where to go?
I think what's interesting about this, though, and thank you for sharing this with us, Wayne, is that it's specific to Argentina. Like they like this. Some of those international joints be like, we doing this, that, and the third. This is like, Argentina.
No, but I love the country-specific ETFs, because when you look at JPY, it's not JPY, but Japan has an ETF as well. South Africa has one. AFRK is Africa in general. That one hasn't done very good. But there's other opportunities because a lot of people in America think everything's about America, meaning all the investments are in America, and that just ain't so.
That's the beauty in traveling, right? You get to a different country, and you know, and to use the words of the president, you think you about to go to a shit old country. You're like, oh, it's not bad here. They living just as well as we are. What the hell was I thinking?
So here's a listing of these companies. I don't know any of them.
Yeah, I'm looking at it now.
I would have to do a deep dive into the actual company. I mean, not the company, the country, and seeing what's going on. Transport, energy, banking.
Yeah, so I'm looking at
mining.
The overall exposure. 38.1% is in consumer discretionary, which is interesting. That seems to be a little bit high. The second one is financials. Then you got energy, then utilities, then consumer staples, materials, real estate, communications, and industrials. But they're kind of in all the different spaces. But banks are number 2 and consumer discretionary is like number 1, which is
and it's funny when you look at most quote unquote emerging markets or industrialized countries, it's kind of the same way. Financials, energy, utilities, and usually a mix up between consumer discretionary and consumer staples.
So that's interesting.
This is, I mean, I'm not against it. I would have to do more research on it. The beta is pretty high though, but I'm not mad at that either though. But again, I would work it into your overall asset allocation, and then go from there. Remember, this is not investment advice, y'all. This is not investment advice. I don't want none of y'all to say, Kamari, Jimmy, and Corey told us to invest in this, then we gonna sue. No, it ain't gonna happen.
Nah.
It's for entertainment and educational purposes only.
Shot the window.
Absolutely. All right, ladies and gentlemen, we are done for today. So make sure y'all come back on Wednesday. Make sure you subscribe to the Village.
Did you want to talk about this one last comment? Because I saw this.
I didn't see that. I'm sorry.
Anthony says, is it safe to say that you can invest in all the companies that met in Saudi Arabia with Trump recently, either through ETFs or directly in ETH? That's a great question, right? Because I saw that. And when I was watching that, I was like, hold up. So in the room, he had was the BlackRock, Larry Fink was there. The CEO of NVIDIA was there. The CEO of AMD was there. It was somebody else, because I was sitting there like just looking at the different CEOs that showed up. And what stood out to me is like the cats that wasn't there too. I'm like, well, where's Zuckerberg? Jeff Bezos was there. But it was a couple of people that weren't in the room. And I was thinking, I was like, are they giving us a play right now? Like, yo, like these are the folks that's with me for the next couple of years. I was wondering as I'm watching, like, is he hitting right now? Is he sending out hints to some folks like, look, these folks is with me, I'm gonna take care of them, or am I reading too much into it? So, Anthony, that's a great question. Do I have the answer? I don't know. But what I will say about it is this, though. You could take that as a hint, like, yo, these are my folks. But also, when you look at the companies that were there, they're companies that are good companies anyway. Like from a balance sheet standpoint and from a revenue standpoint, a lot of the companies that I talked about within that list, and I talked about earlier, that list of companies that make $100 million, a lot of them were in the room with Trump. So, I mean, I can't say that you should, hey, that is an ETF, but that'd be an interesting ETF to follow. Like go to M1 and make
UAE is the ETF.
Which one is that?
UAE. It's the Middle East ETF.
Okay, no. I was talking about he's talking. Are you talking about his Anthony's question? Or are you talking about a previous thing you were talking about?
No, it was about Anthony's question. He was saying, "Oh, you know what? Maybe I misunderstood his question."
No, they had a meeting in Saudi Arabia.
Got you. I thought he was talking about because basically Trump and them get paid from Qatar and everybody else. But I got you. I got you.
In that meeting, there was the folks from Saudi, but also there were specific CEOs and board members from American companies in that room. And I was watching it. I had the same thought Anthony had, because in that room was, Bezos. It was the CEO of NVIDIA, the boy who always with a black leather jacket. He was in the joint. The CEO of AMD was in the room. And I was like, is he sending out a signal like these are the folks that are with me? Because there were certain CEOs who were missing. And I was like, all right, so where's Zuckerberg? He wasn't there for instance. I don't think Microsoft CEO was in the room, but it was a bunch of the other big time companies in that space. Also, I got to do an analysis myself because when I read that article, I was trying to figure out of those top 10 companies, how many of those are in top T. But I digress. That's not investment advice. You know what I'm saying?
It always comes back to top T and Bitcoin for
Hey,
Jimmy.
hey, listen, man. Call me Young Top T out here, but it is what it is, man. So Wayne also says he wanted him to diversify because he has too much in America. So listen, I understand that sentiment. I was just wondering why specifically Argentina, because he must have a reason or logic behind that too, because like to Kamari's point, there's all kinds of other markets you could invest in. So that's it, man. Listen, come back Wednesday. Wednesday, I think we're going to talk about leverage. You said we talk about Kamari? You said we're going to talk about leverage? Is that what it is?
Yeah, but we also said we wanted to talk about what's his name, Mr. Earl.
Oh yeah, we did a show. We need to definitely salute Mr. Earl, man. Mr. Earl, I don't like Mr. Earl, man. So we got a lot to talk about. So we'll see, man. We're gonna do leverage one week and then Mr. Earl another week. We'll figure it out, man. But salute to Mr. Earl and all the Mr. Earls out there.
By the way, just to let y'all know, either way, Corey's got a new name. His name is Rick. We'll tell you about that on Wednesday, y'all. See you later.
Peace.